Hello to all professional and novice traders. Today we are going to review one of the most powerful scalping methods, a combination of 5 EMA and Fibonacci in 1-minute time frame that can help you find accurate entry and exit points and minimize your trading risk. So stay with me until the end of the video because we are going to build a complete and practical system. The first step to implement this strategy is to set up the chart. EMA 5, to identify rapid price changes. EMA 21, to determine the direction of the short-term trend. Fibonacci, to find key support and resistance levels. Just add the EMAs to your chart and draw Fibonacci from the last swing low to the high or vice versa. These tools are the main foundation of our strategy. To enter a trade in this strategy, we need to follow 3 main steps in order. 1. EMA crosses. When the EMA 5 crosses above the EMA 21, this is a sign of increased buying power. This usually happens at the beginning of a fast market move, and if you enter in time, you can ride the main wave. The opposite is true for a sell position. When the EMA 5 crosses below the EMA 21, it means that the sellers have more power and the probability of a continuation of the downtrend is high. Pro tip, don't just rely on the cross. Wait for the cross candle to close completely to avoid false signals. 2. Fibonacci confirmation. Now it's Fibonacci's turn. After we see the cross, we draw Fibonacci from the last swing high to the low. If the price reacts to one of the key Fibonacci levels, such as 38.2%, 50%, or 61.8%, and the EMA cross occurs at the same time, this is the golden entry point. For example, the price is supported at the 50% Fibonacci level. The EMA 5 has crossed above the EMA 21. A confirmation candle has also closed in the buy direction. This means that the conditions for entering a buy are ideal. 3. Additional confirmation to increase accuracy. If you want to reduce risk, you can use auxiliary tools such as RSI. For example, if the RSI is above 50, the probability of a successful buy trade increases. Also, checking the trading volume can be another confirmation. When the EMA cross is accompanied by increasing volume, it means that the market has the necessary strength to continue moving. Thank you for liking the video. Let's go to the most important strategy from which you can learn a lot. Let's say the EUR/USD chart is on a 1-minute time frame. The EMA 5 has crossed above the EMA 21. The price is supported at the 50% Fibonacci level. In this case, we enter a buy trade. We set the stop loss slightly below the Fibonacci level and set the initial target at the next resistance or a risk-reward ratio of 1:2. Note, if the EMA and Fibonacci signals are not in sync, do not enter the trade. Wait until the ideal conditions are met. Scalping without risk management is equivalent to destroying capital. The risk per trade should not exceed 1 to 2% of the total capital. Always set a stop loss and never trade without a stop. Use volume management. If you are a beginner, start with smaller volumes. Before entering, also check higher time frames such as 5 minutes to be in sync with the main market trend. Use the volume indicator to confirm the strength of the move. In ranging markets, EMAs tend to stick together. Avoid trading in this situation to avoid false signals. If you want to see more videos on scalping strategies and technical analysis, be sure to ring the bell to be the first to receive the next tutorials. Today's strategy was a combination of EMA 5 and EMA 21, along with Fibonacci levels. With this method, you can find more accurate entry and exit points and control the risk of your trades. Remember that practice and risk management are the keys to success with this method. Thank you for watching the video so far. I hope you can make the most of it. Watch the video related to the strategy.